Guys, I am back with another juicy video because whenever I mention online that we pay our corporation tax on the last day of our financial year, I always get so many questions. I recently made a short form piece of content, which was me saying these are 3 things that I do in our accounts that as the owner of an accounting firm, I would never tell our clients to do. One of them was to pay your corporation tax on the last day of the year. A lot of the responses that I get on that video are people saying, isn't that really early? Doesn't it hurt your cash flow? Why on earth would you do that? And so I actually wanted to create a dedicated YouTube video explaining exactly why we pay our corporation tax early, answering all of the questions that you guys have sent me, explaining how it works and why it might actually be smarter than just leaving your money sitting around in a pot until the normal deadline. So to set the scene, normally if you run a UK limited company, you have got 9 months and 1 very important day after your financial year end to pay your corporation tax. So if your year end is, say, the 31st of December, you wouldn't actually need to pay that tax until the following 1st of October. Most businesses take advantage of that gap. They just keep the tax money in their business bank account, sometimes even using it for working capital, and then pay it across to HMRC just before the deadline. In our firm, we don't do that. Instead, we save up, like you do, for corporation tax every single month. We treat it like a bill, and that money gets tucked away into a separate account, usually just our normal standard low interest business account, so it's not really earning us very much. Then, instead of waiting 9 months later, we actually send the payment to HMRC the day before our financial year closes. So you might be thinking, why on earth do you do that? And there's actually 3 key reasons. Number 1 is that HMRC actually pays us interest. Yep, you heard that right. If you pay your corporation tax early, HMRC pays you what's called credit interest. Credit interest isn't a massive amount, but it's actually usually more than you'd get if the money was just sitting in a standard business account doing nothing. The second reason is it keeps our year-end accounts really clean. By paying the tax before the end of the year, the liability is cleared. And when we look at our financial statements, everything lines up neatly. There's no big chunk sitting in creditors waiting to be explained, and there's no large chunk of cash waiting to be paid off. And the third reason is, to be honest, the real reason and the juiciest reason. It helps with transparency in our FRS 102 accounts. So in FRS 102 accounts, corporation tax is often split out separately. And here's the interesting part. If you know the corporation tax figure of somebody's business, you can actually back calculate what the company's profit was by making a few simple assumptions. I do it all of the time when I'm looking at other businesses on Companies House. But by paying the tax before the year closes, it actually makes that picture much clearer. And it shows that we've planned properly for the liability and stops our competitors working out our profit margins. Now, I know what some of you are thinking, isn't that a bit weird? But most business owners actually want to hold on to their cash for as long as possible. And that's a completely valid point. If you'd rather keep your cash in your account for working capital, investments, or even just peace of mind, then waiting until the deadline makes total sense. For us though, it's about discipline and clarity. I love the fact that our clients know that we're up to date on everything. I love the fact that our competitors can't stalk our profit margins. The money is already set aside, so paying it across early doesn't hurt our cash flow. In fact, I actually prefer the security of knowing that it's gone, it's dealt with, and there's no risk of it being forgotten about or accidentally spent. It just keeps things very neat and simple, and it keeps my competitors on their toes because they don't know what we're up to. So that is why we pay our corporation tax on the last day of our financial year. A bit of interest from HMRC, some tidier accounts, financial discipline built into our processes, and it keeps those lurkers on their toes. I would love to know in the comments section what you think. Would you ever do this in your own business, or do you prefer to hold onto your cash until the very last minute? Let me know in the comment section. I'm genuinely curious because I had so many questions on that short form bit of content. I am dying to know what you guys think. If you found this video useful, please don't forget to hit the like button if you enjoyed the video, subscribe to the channel, which is the very best way to support me as a creator, and check out some of my other videos. I will pop some videos here and a playlist here that I think you might enjoy. I share more of the behind the scenes strategies for running a business in a financially smart way. Thank you so much for joining me today, and I hope to see you again very soon.